The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the opening bell, and you have markets yet again positive territory, climbing towards pre-market session highs. You're talking about records 63.52 right now, up another 0.2% in the S&Ps. You take a look at this thing, it's not stopping. Now, the one thing I will say, we got markets green across the board. The volume yesterday, a little bit light compared to the prior day, compared to where we've been. You take a look at the volume in the S&P, 982, we'll call it 983, rounding up. Contracts, prior day you did almost 1.41 million, okay? Dramatically lighter volume. Same thing, prior day beyond that, 1.23. Okay, so it was a light volume compared to the last two. You jump over the NASDAQ 100, but there is no fear in this market, man. Seems like this market is just set to sail higher for the foreseeable near-term future. Let's back this out a little bit. You take a look at the NASDAQ 100. Not as pronounced as the S&P, but we talked about it on the afternoon show yesterday. Lighter volume. You're talking about 437,000 contracts coming into 540 and 519 the prior 2 days. You break above that area, and you do it actually on lighter volume, though, right? You're breaking to all-time highs right now, and you're breaking above the prior 2 days, and you're doing it on lighter volume. Something to be alarmed about. But what is not to be alarmed about, you get the Dow higher as well, is the VIX, though. We talked to Tim Moore Tuesdays and Thursdays. I appreciate Basil filling in for the afternoon program yesterday. One of the indices, the ratios that Tim always talks about, the SPY versus the VIX, right? And boy, we got the VIX dropping, man. As this market proceeds to go higher and higher, there is less fear premium in this market. That is a recipe for higher prices. No fear in this market right now. The VIX with 1636. And yeah, as this market creeps higher, you're talking about down from 17 to kick off yesterday. When you put that in a ratio form, it's a good sign for higher prices in this market when nobody's buying insurance premium whatsoever, because nobody's worried, because the market is creeping higher and nobody's selling, and there's no reason to sell. Volume's a little bit light, though. We jump over to yields right now. The 10-year. 4.42 is where we are at. We got a little bit of higher price, lower yield. We're approaching 4.5%. We're now pushing 4.2. You jump over to the dollar right now, DXY. As we have yields pull back a bit, you have the dollar. We were pushing almost 99 yesterday, 98.23. So we have a little bit lower yield, weaker dollar. That's giving gold a boost. We're up by $20 to $33.65. You jump over to silver, up by another percentage point to up 37 cents to 38.67 right now for silver. Okay, we jump over to Netflix. Netflix earnings after the bell last night. Big time numbers. Okay, they beat on revenue, but margins going to be a little bit of a worry going forward. Now, we were talking about this on the program yesterday. Okay, and we were talking about potential option trades, and we were laying out the case for potentially a bearish trade, an option trade potentially, right? Now, what's interesting here, there's a couple things. If you were watching the program yesterday, all right, first of all, if you're making a trade like that and all you want is the earnings volatility, then you can see the risk of getting into the market prior in the day when we were trading at about 12.50 maybe when I was doing the program. Yeah, chopping around between 12.50 and 12.60. Yesterday morning, and by the end of the day you closed at 12.73. So sometimes if you're trying to make those, now the other side of that is if that's your position and that's where you think the equity's trading at, then maybe you get the move in your direction, right? You can always get a bullish move. Let's say you were bullish yesterday and you could have gotten a bullish reaction. Well, you missed $20 to the upside during the day if you wait to get in at 12.70. So there's risk potential reward there as you go forward, but that was quite a move. We do get the rip lower, but from where we made that trade yesterday, we're barely down, right? Netflix is lower, but we're barely below where we were trading at on the open yesterday. You climbed higher by almost $20 in anticipation of those numbers, and you take a look at the weekly, and we're going to open at about 1240, okay, which is the low of Monday. That's how I was looking. We're right at that spike low. And we were talking about this a little bit yesterday, just with the selling, the volume, right? Volume off the top. We get selling on July 1st. You get selling again in Netflix on July 10th, July 11th. Longer term, yeah, Netflix is the clear winner. Shorter term, I think we might have a pullback going at 908, which seems crazy. But hey, so does a run from 162 to 1,341 over the period of 2.5 years, right? You jump over to Bitcoin this morning. Monday, we're up to 123,000. Today, we're up to 121. You have stable coins passing. Bitcoin up $125. Ethereum on quite a run, man. Up by another 6.8%. You take a look at this thing on a daily. Whoo-wee. You're cooking, baby. This thing's going for the highs. 41.42 right now. So, we got a rotation in crypto going on, right? Definitely. When you got the clear leader out there, Bitcoin barely moving, and I'm not looking deep beyond even these two, but I know Ripple's on fire, XRP, and yeah, going to be interesting to see how this landscape changes, man. When you're talking about stable coins, have always been a part of the crypto world, but you start being able to use them for transactions, it's coming, and it all should be coming. And good to see part of that legislation. You know, the regulation of something like this, right? We've seen it. Banks are at the core of everything. If people start using crypto and stable coins, hopefully the regulations keep up, because that always somehow becomes political. And yeah, it seems like those regulations for that stablecoin bill, you got to be backed by one-to-one reserves for stablecoins, and your money has to be invested in short-term government securities or the likes. That's better than the likes of buying 30 years, right? Short term versus the 30 years. That's where you had the banks and Silicon Valley Bank, etc., buying all your 30-year hold to maturity bonds. Boy, that'll be a lesson taught at Harvard Business School for decades to come. Silicon Valley Bank dumping all of their money into 30-year securities that were yielding barely anything. Quite a business plan to go BK, but nonetheless, you got Ethereum skyrocketing higher, and yeah, stable coins are coming, man. You know, I've told the story before, so I've played a lot of online poker in my days, folks, all right? Played a lot of poker as well, but a tremendous amount of online poker, so I was immersed in that world. And early on, this is where, you know, as these technologies change, I encourage you to listen to yourself to a certain degree, as in what technologies blow you away do you see an adoptive nature that things can come over? Because I remember the first time that I deposited onto an online poker site, and these online poker sites are usually operated in like Costa Rica, okay? You're talking about international, you're sending it, you might as well say goodbye to that money because at any moment it could be gone, okay? But I'm shipping $100 over in crypto, and yeah, I realized instantly, okay, I could buy crypto on Coinbase, ship that crypto to the wallet associated with the online poker site, and instantaneously that money was in my account. Think about it, folks. You can't do that with a bank right now. I can do that with Coinbase and Bitcoin 7-8 years ago, and you still can't do it with a bank. So it is about time, man, for sure. S&P's up by 11. We're going to open near records. We'll be right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We have the S&Ps up by 6 right now, trading at 63.46. And yeah, you were talking about record prices, man. The high yesterday, 63.45.50. So we're just above that price point right now in the S&Ps, NASDAQ 100. You're talking about records as well. We're positive by 10 points right now and just under the highs of yesterday, 23,279. So this is an interesting one in terms of ADUs, real estate. The push to make tiny homes in backyards easier to finance. Now, I wouldn't call them tiny homes, man. They're accessory dwelling units. They're mother-in-law suites, okay? But this could be a big one, folks. In St. Petersburg, this is a big push. My dad was building a lot of these units. Many of the homes that he built, okay, had ADUs in the back. St. Petersburg, one of the many cities with a housing crisis, looking for affordable housing. One of the best ways to do that is to allow people to build more housing on the land that they already own. Now, of course, there's regulations go into this. Some cities more open to it than others. All right, St. Petersburg is very open to it right now. And one of the most difficult aspects of it, as somebody now that runs the construction and real estate, okay, and if you're in the market for an accessory dwelling unit, folks, in the St. Petersburg, Tampa area, please call me. My dad built many of these, okay? The one thing that many people don't realize, though, is the substantial cost, all right? And especially if you're building the ones that my dad was building, that I'm building as well, when you go in the back, okay, you're talking about an accessory dwelling unit. You're talking about usually the ones that I'm building, okay, are a garage on the bottom. It's a 2-story complex with either a 2 to 3 car garage on the bottom, and then you have a 1-bedroom, 1-bath, or you can do a studio, okay, on the top. So you have an apartment on the top. You have the garage on the bottom. It's metered separately. It's addressed separately. It's its own dwelling unit as it's put. Now, the difficult part, though, is that these units can run. You're talking about an all-block building, okay? You're talking about 2 stories. You're talking about a full apartment. You're talking about garage on the bottom, 2-story block building. You're talking 200 grand, 250 grand. It is a house in its own right with a 3-car garage on top of it. So what happens? How do you get the financing? It is a huge problem. And guess what? This could be a huge shift, man. I saw this article this morning. Whew. I was sipping my coffee saying, this is amazing news, folks. This is going to be a big story. Listen, you're in this market. You're looking to get one, okay? This market is about to loosen up in a big way. This bill aims to provide government backing for second mortgages to finance construction of increasingly popular accessory dwelling units. We have a housing crisis in this country. This is one of the best ways to do it, folks, okay? I see it in St. Pete. More housing, same amount of land, and a lot easier than building these large multi-unit dwelling units, for lack of a better term, right? Now, what they say in this article here, okay, and this is, you go to St. Pete, man, we got a housing crisis like any other city right now in America, I'm sure. The U.S. is short roughly 4 million homes, okay? Almost a third of all households are cost burdened. Okay. Now I'll tell you, one of the homes that I'm building right now in St. Petersburg, what I'm doing is that instead of putting an ADU on the back, okay, and I had already done this before this, and things might change right now in terms of how this bill goes through, okay. Some neighborhoods, it doesn't quite make sense when the neighborhood isn't $1 million neighborhood, okay? Beautiful homes are selling for 600 grand, maybe 650 grand in certain areas of St. Petersburg where I have some lots. So instead of building a massive home with massive square footage, right, you can overbuild in a neighborhood. Now, you can overbuild, and eventually, if you build it, they will come, right? As in, if you build out the neighborhood, you build out enough lots, then you transform the neighborhood, what my dad did in many areas in St. Petersburg. But in the beginning, the neighborhood isn't ready for such a large house that would command such a large sales price, right? So what you can do is, what I'm doing, I'm building a main home, but I'm building it on a site plan that basically allows for the completion of not only an ADU in the back, but even a pool if you want. So you build the house on the front, you leave the room necessary on the back, the plans are almost there already, but now you have the ability. Because one of the difficult parts is, you sell it to a young, and I say young, anybody, but it's a 3-bedroom, 2-bath main home, and you sell it to somebody that isn't quite ready to go into a second home. Maybe it's their first home, okay? But what you say to them is, hey, you've got land in the back here where you can build. You've already got land. And now with this, oh my goodness, and here's the financing. So it's going to be interesting to see it. But boy, as a builder, folks, I can tell you, it's exciting news. Getting into a couple other parts of this in terms of how they're actually going to spin it. The bill directs the FHA, Federal Housing Administration, to provide government backing for second mortgages to finance ADUs. And it allows Fannie Mae and Freddie Mac to purchase and securitize those loans, which would allow lenders to make those loans and then push them right off their books. It's a monumental deal. Okay? We have a housing crisis. Many cities, I'll tell you in St. Petersburg, folks, this is a big deal. Okay? Because one of the biggest difficulties is walking into a home with somebody that wants to build an ADU and telling them that it's going to be $250,000 to build that ADU, right? Well, guess what? We're going to create a financing mechanism backed by the federal government, and they're going to be able to sell those loans into the secondary market. There you go. Now, that's not necessarily going to transfer over to like a Lennar. They're not in the ADU business as much. They're in the building cities business practically. Okay? But you talk about builders, man. I was jazzed to see that news. Anybody can now just go get a mortgage if they're, equity-wise positioned well. But many times they were equity-wise positioned well. And very difficult to get that mortgage on that ADU. But guess what? The cities need it, folks. All right. In St. Petersburg, there's an extreme housing crisis. And one of the quickest ways to build that out is to add units on people's land that they already own a home on. They're not selling that home to build multi-unit properties. You just add an ADU in the back, and boom, you've got an extra bedroom, you've got an extra bathroom, and you've got an extra dwelling unit. Period. End of sentence. All right. We got markets opening near records, folks. We got the S&P's up by 9, NASDAQ 100 up by 30, the Dow up by 56. You're going to have Netflix open after their numbers. We're going to be down about $30, $12.44 right now for Netflix shares. All right, folks, stay tuned. We're coming back for the opening bell. We'll take a look at some other equities moving this morning. Don't go away.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. You got the S&P's up by 7, NASDAQ 100 up by 22. You jump over to Netflix on their numbers right now, down by 2.6% or $34 in the red, trading at $12.40. And if you recall, it was an $80 expected move in either direction. So you trade up $20. We're almost right back to where you were yesterday morning, but nonetheless, you're down by $34 on Netflix as margins potentially going to be an issue. And during that break there, I actually jumped in and took a look at my transactions on Coinbase. And it is remarkable that I'm going back to 8 years ago. 8 years ago, June 2017. And what's remarkable is that, so even in July at that time, yeah, Bitcoin was trading at about between 2,500 and 3,000, okay? And I was getting almost 1/5 of a Bitcoin, so 0.20 Bitcoin, as Netflix sells off on the open here. Yeah, watch out, here we go. And I was getting 1/5 of a Bitcoin for about $500 at the time. And I made some money playing poker, folks, but I did not make that kind of money. Just should have bought that Bitcoin and never sold it in my Coinbase. Yeah, and those transactions were for the better part of about 2017. And what's remarkable, though, is I'm going back 8+ years ago that I could log onto my computer, right, put some dollars into Coinbase, in the matter of seconds, ship those Bitcoin that I bought on Coinbase to a wallet, and within seconds after that transaction, they took the Bitcoin that I transferred to their wallet and put it right back into US dollars on their online poker site 8+ years ago. And then you think about that you want to send anybody money. So yeah, no matter what you feel, this is happening. It's all happening. And that was a bipartisan deal, that bill. I mean, the numbers in the House, I think there were 110 people who voted against it or something like that. So dramatically passing. And yeah, it's about time, man. This deal that payments take 2, 3, 4, 5 days and, you know, wires cost money, all this stuff. I find myself looking at these banks, you know, saying, really? Now, they do a lot more than that. But when you get into that portion of their banking, you better believe it's a problem, man. All right, we get the Dow rolling over right now, off about 0.5%. UNH is flat this morning. We jump over to Goldman, down about 0.5% so far. Goldman. You know, I was looking at that news for the ADUs, right? Like, man, is this going to happen again? Home Depot, Lowe's. Take a look at these equities longer term. Lowe's, we're coming down to the low of April right now. We're positive by $1 today. You jump over to Home Depot. Pretty similar chart, pulling back to the April lows. Well off the highs of last year at 439. All right, let's jump around to some of the tech stocks. NVIDIA, quite a week. Look at this. We've been talking about it. The 1-to-1 is 191. Seems like a technicality at this point. This thing does not go down. Let's back this up for a second. Let's just take that off for some clarity. And man, you're talking about a run from $94 to $174, and we barely have red weeks in there. Yeah, I was talking about Microsoft. Look at Microsoft up another $181, man. Microsoft only one barely red. Whew. I mean, this is where we're not even cherry picking the April 7th low. Okay, this accelerated higher, pulled back, and then April 21st, you really took off from $355. We're up $160 since then. And you're talking about Microsoft, which has 7.5 billion shares outstanding. So you're adding more than $1 trillion over that time. All right, we jump over to Apple shares right now. Yeah, just sputtering across right now. Apple shares up by 1/4. You jump over to Tesla. There you go. Tesla up by $6, up 1.8% so far this morning. All right, let's talk a little bit of Fed. So, Chairman Powell in focus, to say the least. And you have Governor Christopher Waller basically stating the obvious, right? Private sector job worries drive rate cut call. Well, that would be an obvious statement. The worries are a call for the rate cut calls, right? But there was the private sector job. There was decent. I mean, we saw the local governments, right, added 70,000 plus jobs in June. But he declined whether hit dissent if they don't lower rates in July. Quite a bold statement, Mr. Waller. You have to chuckle, man, because it is that obvious in terms of that, of course, that's the worry. Tell us what you're thinking, Mr. Governor. All right, we jump over to American Express. And the headline was they top estimates, but boy, we got some selling. As the conference call is going on in the opening bell, we got American Express down by 2.1% right now. And the headline is that the premium customers keep up the spending. Amex tops estimates, premium clients keep up card spending. Billed business or transaction volume on credit cards issued by American Express, 416 billion, topping the 412 the market was looking for. Yeah, and they pull back a bit. You take a look at this equity longer term right now, and we've been on quite a run, right? Look at that run. Now let's take a look at the volume here. You come into the highs in January on their earnings with almost 16 million shares. Boy, that's not good. You get above it on less, and you sell off from there. All right, this might be a problem for 320. I mean, we're well off the 220 lows that you were at in April. Let's put this thing on a daily. Oh, boy. I say, oh, boy, look at that earnings. I mean, look at that high. When do you make the high? On a half a day, July 3rd. And then you sell off an extending volume, sell off on 15th. See if we get some today, but this volume to the downside right now in American Express. Take a look at Visa. Yeah, we got some selling on Visa last month, man. All right, we're testing these lows right now, but we got some volume to the downside on those payment processors. You jump over to Schwab on their numbers this morning. A little bit of volatility on the open, up by about $2.92, up by 3.1%. We pull over the headline on Schwab. Trading boost, just like the banks. How about 10.76 trillion in assets? Ooh-wee. Up 14%. Well, the market's been on fire as well, right? 1 million new brokerage accounts. 73 billion in total net new assets. That's below expectations. Stay tuned, folks. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day, Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
All right, apologies there, folks. We are back and taking a look at some of those Netflix numbers. So Netflix, on the reverse of some of the bank action, Schwab higher, Netflix lower. We're negative by $56 right now. You reach a low of $12.08. We're at $12.16. We're off by 4.5%. And this is just a story of expectations, right? Lofty, lofty expectations. They pretty much come in line. However, it warned operating margin. Talking about profits, baby. In the second half of this year will be lower than the first half due to higher content amortization and sales and marketing costs associated with our larger second half stage. Straight up, we're going to spend more money than we thought in the second half of the year. We're going to bring less to the bottom line. Surprise. This is likely why shares. Come on, CNBC. The next 2 quarters feature a robust calendar of events, shows, and films. Second season of Wednesday. The finale of Stranger Things. Happy Gilmore 2. Can't wait for that one, man. You got Frankenstein in there as well. But how about that, right? A company to that degree, post-earnings beat as revenue grows 16%. Folks, revenue of 16% of $11.08 billion adds to the business, baby. But guess what? They're down by 4.1% right now. And listen, I'm a lover of Netflix longer term. But we are in this market right now where it's almost like everything is going up all the time without limits and nothing goes down. And that's just not how it works, man. That's just not how it works. I've never seen the wealth creation in 90-plus days that we've seen in a straight shot. We talked to our man Basil Chapman. He's coming up next with the Tiger Technicians Hour. Appreciate Basil filling in yesterday, talking to our man Tim Ward. Some of his weekly charts, when I talked to Basil on Tuesday afternoon, my goodness, and it makes sense. The weekly charts, there's no pullbacks, man. Right? How do you get a peek in this chart of Microsoft? There is no pullback whatsoever from 355 to 512, folks. Whew. So just a healthy pullback. We put this back on a daily, for instance. I mean, even on a 4-hour chart, look at this incline. No pullback. Put this thing on a daily. Okay, you get the gap on their robust earnings, of course. Let's just say you take it from this acceleration. You're talking about a 382 that brings you down $60. At some point, we're going to get some 382s in this market. Doesn't mean the market's weak. It's just a natural selling of overbought, oversold, and I encourage you to look at Netflix, man. Okay, that's a simple story. Netflix is crushing it. Their revenue's up 16% year over year, $11 billion. But guess what? I mean, their stock's up, what, 700% over a period of 2 to 3 years. All right, speaking of stocks on runs, take a look at Boeing shares, 230.77, basically flat right now. Oracle's been on quite a banner run as well. Mr. Larry Ellison. Yeah, look at this run, man. Look at the last couple of days. All right. If you're in Oracle, okay, be a little careful at 275 on the shorter term. Longer term, hey, don't touch it, right? Stick it in your account, and you're probably going to be fine forever. You are at a market cap of $700 billion, okay? But shorter term, we just traded from 119 to 250. You're pushing 276 would be the 1 to 1.618 expansion, folks. So be careful at that 275, but that's another $25. That's another 10% potentially for Oracle shares. Jump over to Dell. Dell pushing the highs of a few days ago. Yeah, we got this big gap out there on Dell. Going to have to fill that gap. Look at all that volume. That high up there, about 147.66. All right, we jump over to some of the crypto equities. Coinbase up 5.6% right now. I call them crypto, but they're running like it. All right, here's another one that's right there. Okay, Basil had a great trade. Speaking of Basil again in Robinhood, up another 7% today. But yeah, anytime you're coming into the 1 to 1.618 expansion, folks, ooh, you're getting lofty. Short term, you better be ready for a pullback. This is a straight run from $28 to $113. I had to check my math there for a second. What are we dealing with now? Robinhood's a $100 billion company. Whew. How many? They've got about 880 million shares outstanding. Man, you talk about a difference in universes. You go from a company that's valued at like 25 billion to 100 billion. Those are different stratospheres, folks. 25 billion to 100 billion. Now, yeah, you were at, what, 55 billion, 50 billion back there in February as well. We take a longer term look at this equity. You remember when they go public, but we are well above that area now. And hey, on a volume basis, you got decent volume on this monthly, man. Look at the volume on this month. We're gonna accelerate on volume now. We cross the B point on volume. We put this back on a weekly. All right, there's where things are waning a bit, right? There's your indication, folks. There's your price and volume, okay? You break away from the 1-to-1 with volume, and you did that on July 4th week. That was decisive. That was your volume, okay? Then you get a full trading week. The following week, you do 322 million. And what are we doing this week? We're at 200 million on a daily basis. What are we putting out? 50 million. So what are you going to do? 250, 240 million, something like that? We'll be well off those numbers that we were at prior. And look at that chart, folks. 1 to 1.618 expansion, but Robinhood up by 7.5%. They are in the crypto spectrum. That's for sure. They're in that space. All right, pulling up other articles I had up here this morning. Yeah, Meta, they just keep it going, man. And, you know, I heard Zuckerberg talking about, he basically was saying, with the amount of money that they're spending on the capital of building out AI infrastructure, these pay packages are nothing. Now, I've been making the case for the size of the company that Meta is, right? Almost a $2 trillion company. They're probably at $2 trillion right now by the time I have this conversation. We're well off the highs, so we're not going to be at $2 trillion right now. What are we, 1.8, 1.9 trillion dollars? Let's 1.8, we'll call it. 1.76 trillion, okay? And yeah, he's poaching more people, and it is going to be a battle in the mines, man. He hires two gentlemen, Mark Lee and Tom Gunter, a pair of key AI researchers who worked at Apple for its Superintelligence Labs team. The hires, yeah, are part of course, the aggressive recruiting, but he worked under another gentleman that they just poached. Yeah, so Roming Pang, the chief of Apple's large language models team, Meta poached them earlier this month, and now he's got two people that had worked under them. And that, to get Pang, it was $200 million, which is nothing. Pretty remarkable, but it is. I mean, imagine you got that chest of cash. It's all about the minds in that area, man. S&P's up by 9. One more segment, folks. Coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We jump over to Chevron. So this is an interesting one. You talk about a give back, man. So they accelerate higher, the headline, but you sell off on the open. But they prevail in the Exxon fight, sealing the deal to buy Hess. Chevron won its arbitration battle with Exxon, clearing the way for it to buy Hess more than a year and a half after the $53 billion deal had been announced. And what this deal had to do with rights to Guyana, I believe. Let's see. Yes. Acquiring Hess and its stake in Guyana is what is significantly going to increase the quality of Chevron's oil assets. Now, it is interesting. This thing's trading lower today, okay? Adding Guyana was critical for Chevron because its go-forward portfolio was paltry outside of the Permian Basin, okay? Now, Exxon had argued that they had first right of refusal on the sale of those assets. Hess argued that it wasn't selling the assets, it was a merger. and a sale of the entire company, basically, right? They did have a first right of refusal. Exxon, which operates and owns 45% of Guyana's offshore block, claimed it had right of first refusal over Hess's 30% stake. However, Hess and Chevron argue the right didn't apply because their deal was structured as a corporate merger rather than an asset sale. But guess what? Chevron owners today saying, no, I'm out, man. I'm taking that money at the top of that. You take a look at this thing longer term, you're coming into that huge selling. So you got Chevron actually trading lower. We'll call it flat. S&P's up by 5, trading at 63.45. And we get the NASDAQ barely in the green. Dow actually rolls over. You jump over to the VIX. No action in the VIX, man. No reason for this market to sell off when there is zero fear in this market. Folks, thanks so much for kicking your Friday off right here with me on the Morning Market Kickoff. Stay tuned. We got a man, Basil Chapman, coming up next. Have a great weekend. Have a safe weekend, folks. Stay tuned for Basil. Have a great one.